Welcome to the Ryan Pineda Show, where our mission is to invest,
I only expect to make money in things that I understand.
innovate,
It's about believing in the future and thinking that the future will be better than the past.
and inspire.
I am much more likely to hit my goal just due to putting it out there.
You now rocking with the best.
What's going on, guys? Welcome to another episode of the Ryan Pineda Show. Today, I have a very special guest who happens to be my partner at one of my companies, TrueBooks CPA. He is my accountant. He is my best friend. I guess that's what they tell you when you start gaining some wealth. They say your two best friends are your accountant and your lawyer. So by default, one of my best friends is on the podcast today. So everybody, welcome on Matt Bontrager. What's going on, Matt?
Glad to be here, man.
Yeah?
We got some gems to drop.
You got some gems, baby. So first off, let's just start off with your story, man. Tell us a little bit about how you became the numbers guy.
Cool. So, normal schooling. Tried to play baseball like you did, but I didn't make it as far. I got 1 year of college done and then realized that, hey, I better stick this out and get a degree because I'm not going to the big leagues. So I majored in accounting, got a job at the bank, was obsessed with money and finance. And then they preach to you in school, go to one of the big four firms. So then right out of school, I landed a job at one of the biggest accounting firms in the world, built up the resume, and then was doing actually audit before tax, so not even really tax work. And then realized that there was more money in tax. The client liked you a lot more. They didn't feel like you were necessarily breathing down their back, checking their work, whereas tax, you're really helping people. So made the jump over to tax, and then I've been here since. I got licensed with my CPA license in 2016, so licensed for about 4 or 5 years now and riding it out. Now we're here.
And we'll get into how we got here. Yeah. But tell me about auditing, man, because I think that's a huge thing everyone is scared of. Is like, oh, man, like, what if I get audited?
Yeah.
And you were kind of like, were you handling cases where the IRS was auditing them, or were you like internally auditing like everyone's work?
Exactly. So most of the time when you meet an accountant, a lot of the times you'll say, hey, can you do my tax return? And they say, no, because I'm an auditor. Mm-hmm. Most accountants are going to be an audit. And the kind of auditing I did was for larger size companies, right, that had to publicly file. So being here in Las Vegas, it was where I was born and raised. Most of the time when you go into audit, you're stuck on a casino. So I was on Boyd. I helped out on Caesars, helped out on MGM and stuff, but you're really auditing the internal controls of the company around the numbers. So just certain internal processes. You're checking people's work. So that's why when I say there's that adversarial relationship, because now when I'm going to meet with somebody, they're like, oh, crap, the auditor's here. They're checking my work. Whereas on the tax side, they're like, hey, man, this guy's going to help me. He's going to help me save money. So to your point, I wasn't even auditing anything tax related. It was all just like internal accounting.
You were like the snitch.
You are, exactly. You're the
Yeah.
snitch that if something goes wrong, we go to the boss and we say, hey, this process isn't working.
Yeah, this
Change
guy,
it.
he's messing up. What is he doing?
Exactly. So that's really where I spent most of my time out of school. Because honestly, tax in college, you only required to take 2 tax classes to get your accounting degree.
Oh,
So
I even took accounting.
there you go. Yeah.
So I could be the CPA.
You could not, because
Okay.
you need a couple more classes to be able to qualify to take the exams.
Right.
It's about the equivalent of a master's degree. But yeah, so I wasn't even doing tax, and I didn't like tax in college either. I felt it was way too confusing. But after doing auditing, and I got to do a couple tax returns on the side, started to build up some clients, I was like, man, this is a way better route. It's easier to sell to people. Audit's more of a requirement. They're just required to have an auditor. Whereas tax, you're like, man, I can help you.
Right.
I see some room here. You're paying $20,000. I can make you pay $12,000.
Yeah.
And my fee is $1,000.
Right.
So
why wouldn't you hire me? It's
the
a
math
no-brainer.
is there. It's a no-brainer. So that's where just a lot better.
It's hard to tell the guy, hey, you need to be double checked.
Exactly. Who wants
Yeah.
to pay to be double checked? No
Yeah.
one. They're like, no, I'm doing it right. I don't need you here.
Yeah.
But then in reality, they don't know that. But
Yeah.
that's why tax, I think, is all around way better.
Yeah.
Yeah.
No, for sure. So, that's kind of how you got started. And, as far as personal life goes, you've been married for a couple years now. You got twins on the way.
Mm-hmm.
And I think it's so funny because, an accountant, and this is one of the struggles you and I have had as partners, where I'm like this visionary. I'm like, dude, we'll figure it out. it'll solve itself. I'm not worried about it. And you're like, no, I need to know the details. I need to know steps A through Z right now, this moment, or I can't like do it. And I'm like, bro, just freaking do this one step and we'll be good. And so when you found out you had twins, it did not go according to plan.
No. And yeah, I'm a planner, and this was not a plan. We planned the timing right. We wanted kids within 2 years. We got that, but there's just one more. Yeah.
So that threw off the accounting. But one thing that, as your partner, I'm happy about is that it's going to make you work harder now.
Yeah, a lot more. Well, one more mouth to feed.
Yeah. You got to feed them out.
What'd you say? The average price of raising a kid, I feel like, was
like
almost
$200
quarter million bucks. So I'm like, boom, right there, $250,000.
Where am I going to make this $250,000 in the next 18 years? What do I got to do?
So yeah.
Did you have a spreadsheet for that?
I did not, but now it's sink or swim now.
Yeah.
So
I love it. That's how I love to operate. So, okay, you were an accountant and everything. Let's talk about how we met, dude. How did this all play out?
So from what I remember, I found you on Instagram.
This was like 2018, I think.
18.
You
already had
me.
Yeah, you had your first office. When did you get your first office?
At the end of 2017.
Cool. So about probably early 18, mid 18.
Yeah.
Saw something that you posted on Instagram. You already were doing content. You were doing the phone on a tripod right in front of your, the bookshelf look at your old office, and would just pump out videos from your phone.
Yeah.
Daily.
No editing.
No editing. Nothing.
I didn't even know how to edit a video on the iPhone or anything. Like, it was like, whatever happened, that video happened. It was staying in there. There was no music. There was no cuts. And
crazy to think how long ago that was, but you were doing a lot. You were doing 1 or 2 a day still. No?
I mean, I was probably making 3-4 a week. And then, I was consistent on stories and stuff like that. But those videos, they were only like 3-4 minutes long.
Yeah, they weren't too long.
Yeah.
But that's how I found you. So I found you on Instagram, and you had a post saying, hey, I'm looking for a bookkeeper.
Yeah.
I was like, well, I'm an accountant. Oh, so that's another thing. Being an auditor, you're really good at bookkeeping. You're way better, I would say, at bookkeeping than a tax accountant because you understand accounting. That's where I think, really quick side tip is, find an accountant that's good at accounting and tax, not just tax.
Right.
So you were like, hey, I need a bookkeeper. And I'm like, man, I could do this. I was working at a firm at that time, but hustling, trying to find clients on the side. So I'm like, man, I can help this guy for sure.
Yeah.
I remember DMing you, and busy, big league me, whatever it was, saw how young I was, and I was like, okay. You were like, hey, we'll set up a meeting. Hit me up, I think, in about a week. You had stuff going on.
Right.
So then didn't hear anything back. So I wrote back, and you were like, hey, just got caught up with things. And then after a couple times, we ended up linking up, and I met you at your office, met Noel, and
so
from there.
And what really happened for us was, 2018 was the year we really started scaling. It's funny. I just posted something on Instagram showing my spreadsheet from when I was doing it myself in 2017. And we made a lot of money that year with me just freaking inputting random expenses when I remembered. And as we got into 2018 and hired people and started making some real money, that was our first year going over 7 figures. I just realized we lacked a bookkeeper. And our accountant at the time, which was like my third accountant in the last 3 years, was like, oh yeah, I'll get you a bookkeeper. And we kept asking, and it just never happened. And I'm like, dude, I'm tired of this. Like, I got to get a bookkeeper. And I wanted to keep her as an accountant, but I knew you wanted to have everything all in one place. I mean, it's not ideal to have an accountant and a bookkeeper and a tax planner, and everybody's on different pages. So I was really still hoping for her, and that might have been why I ghosted you. But at the end of the day, I was already like planning that it wasn't going to work out. And so, I just remembered you had always been messaging me just randomly, not even like wanting to get work or work with me. It was just like as somebody interested in what I was doing.
Exactly.
And so I just recognized your name, and I was like, all right, you know what? Let's give this guy a shot. And it's funny because like one of my concerns was you were young. And it's funny because I'm young, you're 20, what now?
8.
You're 28. I'm 31. And, we're almost the same age. But for me, I'm like thinking, I need someone with experience. I want somebody who's freaking got some gray hairs. You know what I'm saying?
Like gray hair. Yeah.
Yeah. I want somebody who's been stressed out their whole life, You're too young to be handling what we're about to do.
Yeah.
But, you came by. And I just remember we had our meeting, you, me, and Noel. And Noel, I was like, Noel, I don't even know what we need. Just freaking tell this guy exactly what it is. And I remember she would tell it. You'd be like, oh, yeah, we could do X, Y, Z. And then she would say something else. And you guys were just really in sync. And I just was sitting there watching. And I was like.
Me and Noel hit it off.
Yeah, you guys did.
Yeah.
And I was like, all right, sounds good. Me and Noel talk about it. And I think our conversation was like an hour. It was a pretty long meeting. And, from there, me and Noel talked. And we were just like, you know what? Like, let's just give him a shot, not only at bookkeeping, but tax as well. Let's see what he can do on tax.
Yeah, that's what's interesting. I didn't even think landing, like, after that meeting, because I thought I had done well. Me and Noel hit it off. But I didn't even think I was going to get the tax work. I thought it was strictly bookkeeping, but then you did. You mentioned tax, too, after.
Well, I always keep my cards close to vest. I don't let, in any negotiation, you don't want anyone to have any idea what you're really thinking. I stay ambiguous.
True.
But, so I just remember after the meeting, I was like, I'm impressed with him. Like, I honestly came in to the meeting with the expectation that you were going to fail. Wow. That was how I came into. I'm like, this guy, he's just some Instagram dude. He's young, whatever. And then you blew me away. I was like, Noelle, we should just give him a shot at everything. And she was like, yeah, I agree. And so we gave you the taxes for, I think it would have been 2018.
2018.
Because it was later on in the year. And then, you started cleaning up the 2018 books, I think, something like that. Mm-hmm. And then, by the time we filed for 18, I was like, yeah, I'm very happy with what we paid. Much less than what I was expecting, like hundreds of thousands less. And, ever since then, we knew that, all right, Matt's our guy. He's going to be doing our books and everything like that. And, once we got our books straight, I can tell you that was when our business started really shifting because we were making millions of dollars, not really even knowing how we were doing it on the numbers side. Like we knew we were selling houses. We knew we were making profit. Money was there, but we had no idea how to track our cash flows. We had no idea on KPIs. We didn't know any of that stuff. And so, Noelle, I would say, is also, for those of you listening who don't know, we keep referencing Noelle. Noelle's my sister. And she's the COO of like my whole enterprise, I should say. She's not in any one specific company. She just oversees everybody. A lot of
hats.
Yeah, a lot of hats. And I think one of her main hats is basically like also being an accountant. Mm-hmm. She's always looking at the numbers for every company. You and her are kind of like this tag team. And, once we got all that squared away, dude, that was when business really took off and I started to understand what was going on. But I didn't expect it to lead to a partnership.
Yeah.
Do you remember the first conception of it? Of talking about starting a company?
Yes. Weren't we at Born and Raised at one of the Forever Home like quarterly when you guys give away the awards? Yeah.
That's
and I made a joke. Yeah. Cause you had got this new office and I was like, dude, I should, what do you think about me getting an office there? And you were like, yeah, man, let's talk about it. We'll maybe start a company or something. I was like, oh man. Okay.
Well, because too, and so the listeners know, you were still working at your other job. Pretty much you were just doing it for me on the side. Mm-hmm. And, we were at that party. I think it was the Q3 of 2019. So it would have been around October or something. Mm-hmm. And yeah, it would have been after Q3. So yeah, my guess is it was in October. And we were at the party and you were just hanging out, whatever. And I remember, you made the joke of like wanting an office. And I was like, you know what? It would be really nice to have you in-house all the time.
I was just going to say that's where your mind was, in-house accountant.
Yeah, I was like, if I could have you in the office all the time, it's going to allow us to be a lot better. And that was my main thought. And I was like, how do I get this guy in-house, and pay him enough, whatever. So it started that way. I was like, all right, what would it take to hire him full-time in-house? And then my mind started to think, well, you know how many freaking people ask me every day, who's your accountant? Who's like doing this? Who's doing that? I was like, I never get paid $1 for it.
True.
And,
nothing on the back end. Yeah.
No. And I was thinking about it and I'm like, why don't I just start a company? And this was before, I got really heavy on social media where, now it's just ridiculous.
I was just going to say, you were still getting asked a lot of questions because people were interested in what you were doing.
Right. And that was, I probably had, 20,000 Instagram followers at the time, but that was it. There was no YouTube, no TikTok, no podcast, nothing.
Yeah.
And I was just like, there is such an opportunity here because it is such a need amongst every real estate investor I know. Literally every single one of them, come tax time, has issues with their accountant. Like it's this never-ending cycle of going through accounts. And I personally experienced it until I started working with you, and I was able to, you and I were on the same page with what we wanted to do, tax planning, how aggressive we wanted to be, all that stuff. And, for me, anytime I start a business, it's because I always just see a need. And I'm like, nobody's filling this need right now. Like, I'm going to just do it. And so, I just remember we started having those discussions. I was actually in Tahiti on vacation when we were like really finalizing our partnership.
Oh yeah, the structure and everything.
Yeah, we were talking about, what the structure would look like, what the name was going to be, all that stuff. And then, we settled on TrueBooks. We settled on, our agreement. And, I think we launched officially, 2020, like January.
Yeah,
of 2020.
January 2020. That's what makes it easy. That was our first full year.
Yeah. And, you quit your job.
Quit that December, yeah.
You quit your job, and it's just been a crazy success ever since because, not only with our initial clientele that we had some great investors all across the country. But once I started going hard at social media, then it just became freaking everyone across the country wanted to work with us.
That's what's crazy too. Most accountants are like, really worried of scarcity, which tax you would think is one of the best because everybody you shake hands with is a potential customer. Everybody who lives in the U.S. has to pay tax.
Yeah.
But now to think that there's so much of a need just in the real estate niche where we focus.
Yeah.
That, to think that we're still getting, people every day reaching out to us for help.
Every day.
Yeah, every day. Multiple per day. That's what I was just talking to Nick, our, guy on the team yesterday about. It's like the influx of clients and people that, need this service it's insane.
Yeah, and I saw the potential. Honestly, the potential for me was like, hey, you know what? If this company can basically get me in-house everything for free, at the end of the day, that would be a win.
It is.
But now it's like this could be one of the biggest companies I own.
Yeah, for sure.
Because it's just like you said, we're always looking at industries and how they're changing. Well, a virtual tax business is not going anywhere. There's one thing we're certain of in the world. What is it? Death and taxes.
Death and taxes, exactly.
Yep.
That's what, yep.
So we can own a cemetery or we can own a tax company.
Exactly. And that's what's great is no matter who's in office, no matter what the tax changes are, things are always changing. Do I think there's going to be a day where you automatically do a tax return and it's just, this postcard method that people talk about? Possibly. But the second you're a business owner, there's so much gray area. What do I write off? What can I include?
Right.
How do I handle this? That it's never going away.
No, you and I have talked about that actually. So we were talking about how TurboTax wanted to pay me to do a TikTok. And we're like, is that a conflict of interest or anything like that? And you're like, well, I refer people to TurboTax a lot of times. Like if they're just normal W-2 people, we're like honest with them and tell them, you really don't need us. Like you can just file on TurboTax for way cheaper and get the exact same result. Yeah, it's free.
It's free.
Yeah. It's like you said, once you start getting, the businesses and you become self-employed in the investments, that's when you got to really hire us essentially.
Yeah. What I tell people is if you just have a W-2, there's a right answer on your return. Because I tell people like tax is it's the honor system. You're telling the IRS, hey, here's what I made, here's what I spent money on, here's my net income, this is what I owe tax on.
Right.
If you're a W-2 employee, that thing says you made 50 grand, you withheld 10 of it, you're single, you have one kid, whatever the situation may be, here's your refund, here's the additional amount you owe. It is what it is. There's a right answer.
Right.
The second you start to earn self-employed income because you're an Uber driver or whatever, you're in a whole new ball game.
Right.
Now what can I write off? Can I, contribute to retirement? There's so many, you have the whole tax code at your disposal now.
Yeah.
So, but yeah, for the, if you have a W-2 or something and it's just straightforward, TurboTax is a great service.
Yeah. No,
I used to use it as a CPA before I was self-employed.
Because you were W-2 just.
Yeah, it was very straightforward. Me and my wife, we had W-2s. There was nothing, no gray area. There was no if this, then that. So
and let's talk about the gray, since that's where I like to live. I should be wearing a gray shirt today. But, actually, before we start talking about the gray, let me first, I I forgot to mention, we are having a very big giveaway to promote this podcast, and it's super easy to qualify for the giveaway. We're going to be given thousands of dollars. We're going to be given courses. We're going to be given merch, and there's really a simple way to qualify. Number one, make sure you subscribe to the Ryan Pineda Show on YouTube. So it's actually my second channel. My first channel is Ryan Pineda. All of our podcast videos will be on the Ryan Pineda Show, so make sure you're subscribed to that. Second thing, go subscribe on Apple Podcast and also leave a review there. You do those two things, you're going to be qualified. But we also need proof of that you did them. So the way you submit your proof is by going to ryanpineda.com/giveaway. So once again, ryanpineda.com/giveaway. Submit your proof, and you're going to be qualified to win thousands and thousands of dollars. So I'm excited about the giveaway. And yes, I've been saying it on the other podcast. This is a bribe. I don't know what Apple's terms of service are, but, if I get a slap on the wrist, whatever. We're trying to get on new and noteworthy. A quick word from our sponsors. How often have you driven around and seen houses that were in rough shape? If you're a real estate investor, you know those are the best deals. With Batch Driven, you're now able to capitalize on those homes. You can mark the home, get owner information, and send them a mailer or a text right from the app. And there are other great features like lead management, MLS data, and real-time driving routes. If you want to start today, you can get half off your first month by going to batchdriven.com/Ryan. Once again, that's batchdriven.com/Ryan for half off your first month. One of the hardest parts about real estate investing is finding a good contractor. That's where Southwestern Custom Construction comes in. They've been doing remodels in Nevada and Arizona since 2006. As a fully licensed and bonded general contractor, they're able to help with any type of renovation, all the way from an entry-level fixer-upper to a custom luxury home. Southwestern Custom Construction specializes in working with investors. I've personally used them on many of my projects, so I know their team is legit. If you want to get a bid on a project, head over to customhomenow.com. Once again, that's customhomenow.com. Are you thinking about buying a home in Las Vegas? My brokerage, Forever Home Realty, can help. We're seeing a huge influx of people all over the country purchase here. Many are fleeing California and other high-tax states to move here where it's much more affordable and tax-friendly. Whether you're thinking about buying a primary residence or an investment property, Forever Home Realty can help. Go to ryanpineda.com/Vegas to get a free consultation from one of our agents. Once again, that's ryanpineda.com/Vegas. Now, back to the show. So, anyways, back to the gray area, since that was kind of a gray area pitch, maybe. I don't know. Let's talk about why we specialize in real estate, because I think real estate gives you a lot of tax benefits unlike anything else, and it gives you a lot of gray area. Why don't you talk about that?
Yeah, so let's just hammer out with what gray area is. Gray area can be something where it's subjective, right? There's not necessarily a yes or no. It's, well, wait, there's other questions you have to ask to see if something applies. It's not a strict, there's more research involved with it. So, one could be, well, we like to say how much do you use your car in your business? We have to come up with a percentage.
Right.
Some would say the easiest way to do that is to say, well, if I drove the car 10,000 miles and I only did 5,000 worth of business miles, then it's 50%. But then it's if you didn't keep a mile log and now you're trying to come up with a ratio in your head, we're in the gray area now.
Right.
So anytime, again, there's not just a specific right answer. But to your point of real estate, one of the biggest things about real estate is, yes, you've seen it in the news with Trump and whoever else, like this is how the rich don't pay any tax, and it is through real estate.
Right.
There's awesome methods there to leave generational wealth, tax-free.
Yep.
But there's so many ways to do deals, and I think that's what a lot of people love about it. You can go at it alone. You can find hard money. You can do a JV. You can say, well, hey, my cousin has 20 grand. I have 10 grand. Yeah. And one guy knows how to flip. Let's all partner up. So that's when you just start to get into, more of that gray area, which how should we structure things? Whose share is what? And so finding somebody that understands that lingo and how things are typically structured in the industry is really important, especially for the person you work with. You want somebody that understands what you're doing.
Right. And the big thing with us is I'm always trying to limit my tax bill, right? And so I'm trying new things that are definitely gray area. And we pass those on to our clients as far as like, hey, this is what, Ryan's trying this and, it's working, whatever. We have justification for it, right? We were talking about that saying, what's the saying? Like, tell me why I can't do it.
Oh yeah, exactly. Yeah, right before this we were talking about it, where instead of asking somebody or arguing why you can do something, wait for them to tell you why you can't.
Yeah.
Yeah. You know, why come out of the gate trying to explain yourself? Just take the position if you feel comfortable with it.
Yeah.
Which that's what we call it on a tax return. You take a position. So if we feel comfortable with a position, we'll take it and let them argue why it's wrong.
Right.
Yeah.
Yeah.
For sure. As long as we feel that we can back it up.
Exactly. So, you know, I love that aspect of it. You know, as far as real estate goes, there's so many other things too that we could just talk about. And we've actually talked about it on my main YouTube channel, a lot of these things, such as depreciation, bonus depreciation, you know, how to get primary residency in one of these no income state tax places, and you know, how to do 1031 exchanges. There's just so many things. It's crazy. And cost segregations, you've got these opportunity zones, which are exciting. And you know, we've been looking at how are we going to structure my taxes. So, you know, in the end, like, what's the goal of everybody, you know, as an income earner? It's to make a lot of money and not pay taxes on it. Like, how do you do that, right? And there are legal ways to do it. You know, people think it's illegal that, you know, wealthy people don't pay tax, but the reality is the tax code's right there, and it's for anyone to do if you just read it, and it's legal, and you just got to have the right strategy. And so for us, or for me anyways, I should say, we're looking at 2021. You know, it's a new year, and I'm expecting it to be my biggest year ever. You know, that's the expectation going into it, and hopefully it's the case. But, you know, if it is, we want to be ready for it, you know, tax-wise. And so one thing we're looking at that's different this year than previous years is like, okay, social media influence, education, all that stuff. We expect it to increase a lot. We expect income with TrueBooks to increase a lot. We expect it pretty much all across the board.
Forever home.
Whereas before it was strictly, okay, my house flipping business, you know, provides pretty much all my income. And so now the house flipping business still does what it's always done, but now I'm adding all this extra income. How am I going to offset all that income? And, you know, one of the big ways that we're looking at doing it is through just buying a lot of rentals and using depreciation to do that. And that's one of the big topics of discussion I'm having with a lot of YouTubers and influencers now, because one of the side effects that I didn't expect from being so active on social media was that I was going to get all of these influencers who are not necessarily real estate investors, you know, and they're like, okay, we just paid, you know, $1 million in taxes or hundreds of thousands. And, you know, you're telling me you made this and paid this. How did you do it? And, you know, we're kind of transforming into like not just real estate investor niche, but also influencer, these people that make a lot of money doing kind of what I would call new age things.
Unconventional things. And that's why it's important to find an accountant that understands it. Some of these older, like we talked about earlier, these gray haired accountants, they don't want to touch that stuff because they're like,
they don't get it.
Yeah, they don't understand it. They don't think that a kid can make $2 million on YouTube. And I'm like, man, that's the norm now. There's a lot of them doing it. So yeah, for sure.
And when you think about just what's work at the end of the day when you're a vlogger or a YouTuber, right? It's like, well, I'm here filming my daily life. Like, everything I touch is pretty much part of business.
Your business operation, exactly.
Right. And there's really nothing in the tax code right now that's saying, hey, you know, this is how you should treat influencers or vloggers or anything. It's like, try and prove to me that the couch I sit on is not a write-off. It's part of my set.
Exactly.
You know, prove to me that the car or the watch or anything that I'm highlighting in my videos was not a prop or a marketing tool or whatever.
To build the image, exactly. Before it was, oh, you use your cell phone in your business, cool. You know, maybe you use 80% of your cell phone, but now it's like my cars, my jewelry, my house, my rentals, my, you know, now that you can carry around a camera and monetize with that camera, which is through YouTube, I mean, it's, you know, it's limitless.
And it doesn't even have to be YouTube for what we're talking about.
Yeah,
I mean,
exactly.
There's TikTok, there's Instagram, this podcast, like, it's just, how can you tell me, like, once again, prove me wrong. How can you tell me that this does not apply, you know?
To my business or help generate income.
Yeah. So I think the world is definitely changing on the tax side, and that's something we're trying to be ahead of. And mainly the benefit is that I'm experiencing all of it. And so it's like I'm the guinea pig.
I was just going to say, yeah, we have you as almost the flagship because every one of our clients, right, most of them are in the same industry, real estate. So it's we haven't not ran into something already dealing with you personally, right? Like we're going to see, or we're going to have some sort of path that we're like, yeah, this is what we did with Ryan, or, this is what we see works best.
Right, exactly. And I don't mind being the guinea pig as long as I don't go to jail,
You too, yeah.
Well, I guess, we're both in it together.
Yeah, exactly, yeah. Neither of us
just
are going
talking
to jail.
about it on this podcast.
Yeah.
But anyways, so I want to talk a little bit about some common things that you see with tax that, some just common issues that the listeners can learn from.
Yeah, so let's knock out the, if you're employed and you get a W-2. It's pretty simple. Just make sure you keep your tax forms, get them organized. When you're ready to do your taxes, end of January, early February, send them off to your accountant. You're good. Really no issues there. Now you're self-employed and you have a 1099 and you've, made some money on the side. Like I said, you're in a whole new world now. So not only do you want those tax forms, but hey, you got a 1099 because you're a delivery driver for Uber or you're a driver for Uber or whatever it may be. And you got a 1099 for $50,000. Well, you get to take expenses against that now. The gas that you put in your car or the miles that you drive, your cell phone for using the app, things like that. So now when you come to your tax accountant, we need a profit and loss. Because if you just hand me a 1099 for $50,000, I'm going to assume, okay, you had no expenses against this. You're going to pay tax on $50,000.
Yeah.
I've had people literally ask me, I can take expenses against that? I'm like, what?
You're running a business.
Yeah, you're running a business. Exactly.
Yeah.
So just to, understand that if you have self-employed income, keep track of your expenses. And that's where I always say bookkeeping.
Yeah.
Bookkeeping is, it's not a fun job, but it is so necessary. And it is, anytime somebody asks me, how can I save money on my taxes? Do you have good bookkeeping? And they say no, I say right there. That'll shave off so much from your tax bill because think about it. If your effective tax rate is 20 to 30%,
right,
every dollar you miss is another 20 or 30 cents in tax you pay. So,
well, and one thing I want to add to bookkeeping too, since bookkeeping has really
how we
my
met.
Business. Right, that's how we met because I knew it was a problem. And just now having the numbers, bookkeeping helps you not only recapture expenses you may have missed, right? Okay, you're only talking about I think that's the smallest aspect of it.
Make better business decisions.
Yeah, the biggest aspect is the business decisions of actually knowing your numbers. So now, just knowing my numbers every week, every month, every quarter, I can now make better decisions throughout the year. I can say, you know what? This marketing channel is getting a terrible return. We need to cut it off. And this one over here is getting really good, and we're not spending nearly enough. So let's add some more income to that. And look, that change just paid for bookkeeping way more than it cost me, right? Yeah. Just being able to make that decision throughout the year. But also, too, that's assuming you even do bookkeeping, right? Mm-hmm. That's assuming that it's something that you already do. But think about, I misspoke. That's assuming you don't do bookkeeping, okay? You don't do bookkeeping and now you do, whether it's you doing it yourself or you have someone else do it, you can make better decisions. Great. That'll pay for way more than it's worth. But imagine if you're doing the bookkeeping yourself, okay? You're a business owner, you're doing all these great things and you're in QuickBooks every day trying to rectify things and input things and all this crap. I tell my students and everyone, I'm like, you should not do your own books. It's a job that's not worth your time. If you could hire somebody for $500 a month, whatever it may be, or you're at a higher level, it's $1,000, it's $2,000, even if it's $2,000, right? Okay, if you're at a level where you've got $2,000 worth of bookkeeping, that's $24,000 a year. Is your time worth $24,000 a year if you're at that level? No.
You're losing more revenue trying to do it yourself.
Exactly. And so my philosophy has always been, dude, and whenever I look at stuff like that, I'm like, okay, I can hire this guy for $20,000 a year, or I can just go get one more deal and I don't have to do anything and freaking all this crap I hate,
And think about that. If that took you even 10 hours a month, 120 hours, how many deals can you find in 120 hours?
Yeah, more than one.
More than one, exactly. So you just paid for years worth of bookkeeping by just having the guy do it instead of you.
Right.
Yeah.
So totally, my biggest advice, you don't even have to use TrueBooks or anything. This sounds like a TrueBooks pitch throughout the podcast, but this applies to all accounting, okay? Whether you got an accountant you've been with forever or whoever, you should definitely not do your own bookkeeping.
And I don't care if you use an accounting software, just like you saw Ryan. You were running what did you do in revenue? And you still had stuff in Excel. You had stuff in spreadsheets.
Right.
Even if you use a spreadsheet works. Just something that shows your income, shows your expenses, because that gives you a baseline.
Right.
Yeah.
So what are some other common things you see?
I have some that are specific to real estate. Well, so let's go back on this one. So I get asked the question a lot of, what can I write off? And there's 2 tests that you really have to meet with a write-off. It has to be ordinary. Ordinary means, is this common for this type of business that you're running?
Right.
Right? Does it make sense for what you're spending money on? And then 2, it has to be necessary. So is it necessary for you to spend this money as an expense in your business to pursue more income, which, again, most expenses do.
Right.
If you're an Uber driver, I have to spend money on gas so I can drive my car to earn more revenue. Right. So those are the 2 tests, and that's one of the questions that we get asked a lot. So there's that. And then I have one that's specific to real estate, which is inventory, that a lot of people don't understand once they get into the flip game is now you're buying something and selling it. So it's almost the same thing as how Walmart buys a gallon of milk and then sells a gallon of milk. That when they buy that gallon of milk, it's not a deduction. So if you buy a home in December to flip and you don't sell it by 12/31, the end of that year, it's not an expense. It's an expense when you sell it. So there's just some intricacies there that, again, you just want to have somebody that specializes in what you do, so they understand your industry.
But as far as inventory goes too, isn't it something that you kind of, because different people use different forms of accounting, because isn't there like different accounting methods?
Cash and accrual.
Yeah. And so it's like, couldn't somebody say, hey, this is just my business, like it's all held, or like we deduct everything that happened this year, or like you're saying, once the property sells, we deduct, like, can you go either way?
You can, but you have to stick with it. And there's certain tests that if you're a small business to the IRS, which their test is if your gross receipts are less than $25 million, you can qualify as a small business and use cash accounting, which is what you're saying. That's simply cash in, cash out.
Right.
So in that case, you would deduct that home.
Okay.
Right, or what you put down. You paid for it, it is done in that year. But what we like to do is the accrual method, because we call it the matching principle. Because think about it in this example. You buy a home for $200,000 in December.
Right.
And you don't sell it yet. So let's just say that's your only expense. You're going to show a $200,000 loss, right? So cool, no tax. You have no tax bill. Now come next year.
You got a $300,000 gain.
You sell that bad boy, and now you're sitting with a $300,000 gain and no expenses. So now you're like, crap, now I got $300,000 of tax, worth of tax. So, or that I'm going to be taxed on. So that's where we like to match it so that you stay about even. You're not going to have one big fluctuation and then another one the next year.
Right. And I've been using accrual, pretty much my whole life, but it's just interesting that,
that's what I'm saying. There's so many
ways you can really, the cash method might be better for certain people. You just don't know until you get into the books.
For sure. And that's what I'm saying. It'll end up shaking out because just like that example, you're just going to take a lot of expense one year, but then the next year you're stuck with a lot of income. So it'll work itself out. But just like you said, there's definitely strategies that like maybe we're ready to go to accrual, but we don't want to do that yet.
Right.
Let's hold off a year or something, so.
Right.
Yeah.
Well, I know that those are some of the common things we see as far as tax goes, but we can't do a tax podcast without talking about California and New York and all these places that people have the most tax questions about. It's funny, man. My YouTube, the most viewed videos are my California tax videos, and I never intended for that to happen. It was a tax I was talking about. I'm like, this is ridiculous that California
took off.
Yeah, and they just took off. And I'm like, man, how many people are interested in like California? But apparently a lot. So I figure people listening now are probably interested in it. But man, like this California tax situation's crazy, dude.
Here's an interesting thing. I have a buddy that works for a firm out here in Las Vegas. He wanted more time with his family. COVID's, still running rampant, whatever. He wanted to work from home. And he actually so he lives in Las Vegas, found a California firm paying California wages, but now he works in Las Vegas and works for that firm in California. Doesn't pay any California tax, because he lives in Las Vegas, but he's working for the California firm. So he gets to make California wages, which, as we know, let's say somebody's making 50 grand here. That's probably 65 or 70 to someone in California.
Right.
So he's making more than his peers here in Vegas, not having to pay any California income tax, and works from home.
Is it just because he's a sub? Like,
No, he's an employee of them, but again, he's not. It's where the work is being performed, almost like with you in baseball.
right.
When you were playing in a state that had state income tax, boom, you owe state income tax.
But didn't we talk about that California worldwide thing?
That's if you're a resident of California. So
But he's not.
He's not. He's still a resident of Vegas or of Nevada.
I get it.
So if he was a resident of California and lived in Las Vegas, let's say temporarily, right? Because that almost doesn't make sense. Then he would owe California tax. But he's a Nevada resident just working for a California company.
Right.
So this guy just landed himself, almost 2 times multiple of what an average salary would be here.
And now that I think about it, that makes sense because, like, let's just use the example. We're on Apple Podcasts right now. Apple's like, Ryan, dude, we want to hire you as our W-2 influencer. Even though most of, like, the sponsors we do are always 1099, right?
Yeah.
But let's just say Apple's like, Ryan, we want you on payroll.
You say, okay, I want Silicon Valley wages. I want what the guy in San Jose is making.
Yeah. So would they take California tax since I'm here in Vegas?
No, you don't have to pay it. They'll have to pay some tax on top of your salary, similar to you do with your employees.
Right.
But you are not going to owe you personally.
Yeah.
Say you get a fat salary, 500 grand.
I'll take it.
Yeah.
If Apple wants to do it, I'll take it.
Yeah. You pay no California income tax.
Right.
Because you're not a resident of California. So it's like, now look at the opportunity. You're making bigger wages, getting to stay in your hometown. Not even your hometown, at your house. He works at his house. And they sent him all new equipment.
That's crazy.
So
I was trying to think about during my baseball career how the taxes looked. I was making so little that I don't think it mattered because my year to date was always like $6,000 or $7,000, something crazy. Because it was bad. But I played in California.
Mm-hmm.
I played in Canada. I have no idea how the Canadian taxes were getting paid. I really don't.
I'd have to look at your return. There's a chance that back then they were, you'd had to file something. Or they just withheld there, or like the organization did it for you.
Yeah, well, they did. I mean, we got our paycheck with taxes already taken out. I just don't even remember how it happened.
Yeah.
Do you think I was paying Cali taxes when I was with the Oakland A's?
California taxes?
Yeah.
When you were playing in California, yes. When you were playing in a state with no income tax, no.
Oh, okay. Mm-hmm. Even though the A's were paying me, right?
Even though the A's were paying you, similar to just my buddy. It's a California firm paying him, but he doesn't owe California tax.
Yeah.
But so interesting. What was where was your residence when you were playing ball? Like, where
Vegas.
was your... Vegas. Yeah. So there you
I've
go.
always lived in Vegas. The only time I didn't live in Vegas was for college.
Mm-hmm.
Yeah.
So the guy that, was on your team that had a home in California...
He was paying it?
He was paying California. He was paying
what
California.
A loser, dude.
Yeah. Loser. he was paying California and the other states he was playing in. So if you guys were in a state where they had income tax, he's paying both. You're only paying the one that, you're in at that time.
You could pay double state tax?
Oh, yeah. Everybody wants their fair share.
So let's just say, you're in the top bracket, right? You pay 40%, then you pay California another 13%, and then you're playing in, what's another high? New York.
Yeah, New York, exactly, yeah. You'd be getting hammered.
You'd make like 30% of your money.
You'd have to pay to play baseball at that point. Yeah.
Well, I already was doing that.
Yeah, see, there you go, too.
That's why I had to start Flip Nation, because freaking I was making no money.
Look at Wayfair. That was a huge tax court case that just landed. You know how people are selling stuff on Amazon and Etsy and stuff like that? They're making the platforms collect on sales tax, state sales tax, where the sales are being occurred. So before, you could sell something on eBay to somebody in California and not owe tax. Now, if that California buyer pays that, they're requiring California and the platform to withhold tax.
I remember
everybody wants their share.
Yeah, I remember when that happened on Amazon. Mm-hmm. It was years ago. It was like Amazon never had tax, and then all of a sudden, I'm like, why am I paying tax?
It was Wayfair. The big furniture, Wayfair versus North Dakota was the court case.
North Dakota
that shook up everything because now it's like, holy cow, we got to withhold tax in every. If I'm doing online
how long ago is this?
A year or two. So it's pretty recent for the tax world.
You know what I've noticed too, and I don't know why this happens. And I should have actually asked you about it, but so my courses right now are on Teachable, and Teachable takes payment. They do everything like that. And I've noticed on like 95% of them, right, there's no tax. It's just whatever. Digital product. And then randomly there will be ones with tax.
It's probably because they're coming from states with income tax, and that's why I was saying the platform should withhold. So the platform might be withholding that on top of their merchant fees.
Yeah, I mean, I'm not getting the tax. I can see the total bill, and I'm like, why did that guy pay tax? That was weird.
Yeah, and exactly, right? It could be because they're coming from a state with income tax. That's where it's like...
I would have like a digital product like that. I've never seen.
The state thinks, well, my resident, but right from the state's point of view is, well, my resident bought that.
Right.
So you owe a sales tax. It's like almost if they walked into a brick and mortar store and picked up an item.
Right.
You know,
well, and I'm not saying this because this would be fraud, but essentially if you just change your zip code, that wouldn't have happened.
Yep, exactly. Almost
on your billing.
On your billing. If you would have said that you were in the state in which you bought or a state with no sales tax.
Yeah. That makes sense.
Don't do that.
Yeah. I didn't say do that, but I'm just saying.
I'm just saying though, something, you know.
Yeah, that's just what happens.
It might not withhold, yeah.
Yeah. Maybe you're a nomad.
Yeah.
You know? But yeah, dude. Is there anything else you can think of that the people need to know?
Oh yeah, okay. So on top of that, so I was just talking to my buddy earlier about this, right? So he's the guy that lives in Nevada, works for a California firm, doesn't pay California. New York actually is the only state that still tries to do that. Let's say you live in Nevada, like my friend does, and a New York firm offers you a job on a W-2, but you're going to stay in Nevada. New York will still want their fair share of tax, even though you're not a resident there. So that's how ruthless some of these states are getting.
Right.
They're like, man, we want our share, you know? So that was interesting, and it sounds like New York is the only state doing that, which in one of your recent YouTube videos, right, we talked about New York and Goldman Sachs leaving.
Right.
That was $1 billion they were saying in state revenue that they just lost because now they're going down south to Florida.
Well, and that was the whole thing that got me tripped up and made the California video. California's Dead. If you guys are on YouTube, go search that and you'll see the videos I've made. Kind of, once again, didn't intend for it to be a series, but now the series is called California's Dead. Yeah. And
there's a lot of people hopping on the bandwagon with that. Dave Ramsey made one. A lot of people with the California stuff now are trying to,
you know, I don't want to say Dave Ramsey copied me, but, you know, at the end of the day, he probably did. And Dave, if you're watching this, we can do a show together. Dave Ramsey show versus Ryan Pineda show. But anyways, with California, the only reason I made that video is because it was so ludicrous what they were proposing. They were saying they wanted to raise that state tax to like 16.7%, something like that. And then they also were saying they wanted to retroactively penalize people who had already left. It was like, how can you go tax somebody years later who like doesn't live there anymore, made the decision to leave because of these taxes or whatever, and you're still going to go try and collect years later? Like, they're already paying tax at wherever they move to.
And that would be a nightmare. How you would even be able to confirm those numbers, that would never work.
Well, and they were also, too, talking about doing it for net worth. Like, they were going to have a net worth tax.
Oh, yes.
Like, how do you confirm that? Like, dude.
Yeah, because what if I don't own it? What if my LLC that my trust owns and, you know, there's so many ways around that, too, which, again, you're just making it more creative. Right? Yeah, you're giving the attorneys and the accountants more work, which is great. That's what I'm saying. As things change,
we'll do it if California does it for you.
Right?
It's just like, it's, once again, I guess, gray area, because anyone's net worth could be argued anything. Like, you know, it's funny because, like, if you go to Google, the second search after Ryan Pineda's Ryan Pineda net worth.
Yeah,
and it's like,
does it spit out a number?
I don't know. If you want to look on your iPad, tell me what it says.
Yeah,
but it's like, number one, how does anyone even know what someone has unless they own publicly, you know, traded companies? Which, okay, you have a stock price, whatever. But like, how do you value a private company? You know, in a way, how do you know what kind of bank account or anything like that?
Millions is the site, millions.com.
What are they saying?
Ryan Pineda net worth from MLB to millionaire. So overall, that comes out to about 4.3 million in personal net worth.
What website is that?
Millions.com.
There you go.
MILLYUNS.com.
That's cool, man. I don't know.
And you're on here. Ryan Pineda net worth, TikTok star, idle worth.
Is that what it says? TikTok star?
TikTok star in parentheses, yeah.
Why does my face have a
question
mark over it?
It says undisclosed on this site for your look. Man, these people are tracking. Look at this. So ideally, somebody could have net worth, salary, cars, real estate. These people, but
people are crazy.
So right away though, it says 4.3 million.
Well, that's pretty good. I think that actually came from my YouTube video about whatever. I think I did it like 5-6 months ago. And basically I just broke down what I owned in real estate, cash, and stocks. And I was like, honestly, this is what it comes out to be around. And it's gone up since then, the last 6 months. But I was like, but that's not counting any businesses. Like these businesses obviously have a lot of value, and I'll probably do a YouTube about this again, just to kind of like update and give like what I really think the net worth is. Because, somebody could go offer me, say, $5 million for my house living business. I wouldn't take it. I mean, it'd be dumb.
Yeah, you would make that too quickly.
Yeah, like to give up all my future cash flows.
Exactly, the cash flows is what you're selling. Yeah.
So, I don't know what you'd truly value these businesses at, especially the education. Like, what would you even value my personal brand at as it grows? Like, I would never sell off a piece of my personal brand at this point.
No, that's why we're saying too, and that's why it's almost good for you to make another video on it. Things are growing so fast that it constantly changes.
Right. Yeah. Well, net worth change. Look at Elon Musk. His net worth went up $100 billion in a year.
Did you hear that kid last night who bought this whole everything going on with GameStop turned $50K into like 20 or 30, 40 million?
Yeah. I just did a TikTok. GameStop is up like 18x in a month.
Elon tweeting stuff.
Love it. Yeah. But yeah, man, it's funny with net worth. It's like,
yeah, and to full circle too, net worth. You don't know your net worth if you don't do bookkeeping and tracking that stuff. So like it all is full circle. If you're tracking what your company's doing, that helps you value, your net worth. So
yeah.
And that's another thing for people to focus on is everybody thinks, oh, I want to track profit. What you really want to track is your assets and how your assets grow, because that's how your net wealth grow, or right, like your net worth grows. So, but it all starts with tracking what you're doing in your business.
Yeah.
So,
and honestly, we're talking about what's my business value, all of them, right? Like the only way we could really truly value them is by having, the right numbers, and then seeing what kind of multiples somebody's willing to give me based on those numbers. And that gives you a rough idea. But at the end of the day, it's like there's always got to be a buyer and a seller.
Exactly.
Somebody watching this might be like, Ryan, I believe in you more than anything. Like,
I'll pay you 10x.
Yeah, I'll give you 20x. Like, I believe in your future, but you got to I only want to buy half because I want you to stay on and have skin in the game. And I've heard that before too. Is like when you're dealing with like personal brands and stuff like that. Like, because Grant Cardone did a video talking about how he's worth multiple billions at this point, and he basically said his 10x company, which is just Grant Cardone Enterprises, essentially, is worth $1 billion. And I did a video, and I'm like, it very well might be worth $1 billion, but Grant has to stay on for it to succeed.
For sure.
Nobody's buying 10x without Grant. And so it's like, you're going to see a lot of businesses where the founder or the face has to stay on, and probably have some type of equity still in the company so that he's incentivized.
It's incentivized for them. Exactly.
Yeah. So even if I did give a number, it's like, I'd still never see that because I couldn't walk away.
Yeah, no, you wouldn't. Yeah, you wouldn't want to. And that's why, right, we just said the business, the growth is too high, right? You're not even near.
It's at the beginning stages.
Yeah, you're still at the infant stage of how things are growing, and they're growing so fast. So
yeah, for sure. So anyways, dude, I think that was a great show. I think people got a lot of value out of it. As we said before, definitely check out TrueBooks. You can find us at TrueBooksCPA.com. We will link to that in the description below. We will also link to Matt's social media channels below. He makes a lot of YouTube content just specifically tax. So if you're into that stuff and you're a numbers person, definitely check it out. If you're a nerd, go check it out. Or if you like saving money, that too. But also, lastly, we're having a giveaway, as I said before. So make sure that you guys jump on the giveaway. Like I said, all you got to do is just go to the Ryan Pineda Show on YouTube. It's my second channel. Go subscribe. Also, go subscribe on Apple Podcast. Leave a review. Then submit your proof to ryanpineda.com/giveaway. And you'll be entered to win thousands of dollars, merch, courses, all that stuff. So anyways, Matt, appreciate you coming on the show today. Appreciate you giving value. And we'll see you next time, dude.
Awesome.
Thanks for watching The Ryan Pineda Show. If you want to work with me, head over to ryanpineda.com. You can find my courses, coaching programs, and upcoming events. We also have free resources you can download, so head over to ryanpineda.com.